Tax filing season is opening up soon. Are you ready? It is just around the corner on January 26th, and taxpayers, they're going to notice several changes this season due to the One Big Beautiful Bill Act that was signed back in July. To tell us how we can prepare for the changes and what we're going to be filing for, we're bringing back our local taxes guy, Charles Wells of Charles Wells Tax Service. Thank you so much for joining us here, getting us some help on the spot.
Sure. Thanks for having me.
Yeah, and we've got some things that are, changing from the past. So we will see maybe some deductions. Before we get into some of the details, though, what is a deduction on the taxes? Explain to folks.
So a deduction is something that will reduce your taxable income. So basically, it's deducted from your income.
And the standard deduction is higher than last year. Those changes can be seen on the screen now. So is that generally, a good thing? Why might someone take a standard deduction over itemized deductions?
So the standard deduction is raised every year, and that's the case this year as well. The reason somebody might want to take a standard deduction is because it's just much easier to take the deduction that's allowed to you rather than having to itemize and add up all your expenses.
And where are we seeing some higher deductions this time around?
So the single deduction is $15,750. Married filing jointly, that's going to be doubled up to $31,500, so doubled up from the single. Head of household is $23,625, and then the big addition in deduction here, as far as the standard deductions go, is for seniors. So anybody 65 or older gets an additional $6,000 that they could add to their standard deductions. You're also going to be allowed to deduct up to $25,000 in tips if you generally receive tips, and you can deduct up to $12,500 in overtime. So those are all big deductions.
Yeah, those tipped wages, that was a big item in the political realm. Now it's in the tax season realm, so you're going to be working on that. That's new this year. Also this year, car loan interest deduction is also being introduced. The catch, though, to that, can you explain how that works?
Okay, so for the car loan interest deduction, the big qualifier is that it has to be assembled. The final assembly has to occur within the USA. So there is actually a database where you could enter your PIN, or sorry, your VIN, and that's by the NHTSA, which is like the National Highway Traffic Safety Association. They have a database. You throw your VIN in there. It'll say if your car was assembled in the USA, in which case you can deduct up to $10,000 in interest, and you don't have to itemize to take advantage of that.
Any tips for folks that itemize or have to get organized with the no taxes on tips? Any piece of paperwork or documents that they have to bring with them?
So for your tips, all you really need to do is bring in your W-2, because there's always been a line item box in the W-2 for tips. So hopefully the employers are accounting for that properly and putting it in that tip box in your W-2. As far as the overtime goes, that will also need to be separated out, and then you pretty much get to deduct about a third of your time, assuming that you're doing time and a half.
Something that's new, parents are looking at this, the Trump accounts. They're introduced this year. Can you talk about what they are, who they benefit? Okay,
so the Trump accounts, they're basically like a traditional IRA for minors. You could open up, it's a retirement account in the minor's name, but it's a custodial account. And then you can contribute up to $5,000 into that account annually. And it will benefit the parents when they contribute that amount, because it will be tax deductible in the year that they make that contribution. So you could deduct that from your income like you would a deduction from for a traditional IRA. And then once the account holder, who's the minor, once they become 18, they can make withdrawals for education expenses and buying a home, things like that. Pretty much the same guidelines are in force for a traditional IRA. Now, when they do take that out, they'll have to pay ordinary tax on it like you normally would, but it's going to be in the name of the account holder, which is at that point would be like an 18-year-old. So, and
real quick,
they should have lower income.
What's the filing deadline this year, so people know they got to get this together?
Sure. April 15th. So pretty much same as every year.
Yep, the big day is on the way. It doesn't feel
Yes.
like it's that close, but it will be as we're
Oh,
making our
it's
way through the
coming.
winter.
Yep.
All right. Charles, thank you so much for coming back.